All right, everyone, thank you so much for joining our sort of coffee table conversation about investing in the future of Web3. We have some amazing panelists who are going to give you their points of view and also give you their background and expertise. I'll tell you a little bit about me, and then I'm gonna hand it off to my lovely esteemed panelists. My name's Rakia Reynolds. I'm the founder and executive officer of Sky Blue Media. We are a strategic communications agency. We work with Web 2 companies and Web 3 companies. We launched the brand BFF, and we also launched the company Proof of Learn that spoke on the main stage yesterday. That is a learn and earn protocol company. So I'm gonna be moderating our discussion, but I'm also going to open it up for the last 15 or 10 minutes for you to ask some questions, because you've got some great brain trust on this stage today. So I'm gonna hand it over to Jules. Jules, tell the people who you are and what you do.
Can you hear me now?
Yes.
I am Jules. I am founder and CEO of Frequency. We are a global strategic and marketing firm. We have a unique perspective of technology, marketing, media, and pop culture, and how those will intersect in the future.
Great. Well, my name is Victor. I am founder and CEO of M3 Group. We are financial advisors for Web3 companies. We help them on fundraising as well as listing on exchanges.
Thanks. My face is not up there, but I'm here. Estelle O'Hyan. I'm co-founder of NFT Basel and CEO of EO Art Concierge. So I come from an art background into the NFT space, and now Metaverse Group and so forth.
Awesome. We are so happy to have you. We're gonna jump right into this conversation. So if we're, all talking about investing in the future of Web3, I'd love each of you to talk to us a little bit about what do you see as the future of Web3 as it stands today, and then we're gonna dive into some of the recent headlines we've been seeing. Jules, you wanna start?
Sure. I think our panel was originally geared towards VCs and the venture-backed opportunities a lot of projects see, but I think because at Frequency we deal with people and building relationships, I truly believe that this is the time to invest in people. And I always say there's 3 C's, so it's community, compassion, and coaching. So I think it's all of ours responsibility to be able to nurture the communities that we're part of. I think we have to be compassionate towards the community at large of what's going on in regards to FTX or just the bear market in general. And then coaching people to be able to be onboarded into Web3, whether it's education or providing them with resources, or even coaching people within our own communities who are coming in and are just kind of curious. So that's really what I think when I see about investing in Web3, at least for the next year and a half.
Awesome. Yeah, I can definitely agree with that, and bringing in the side where we work mostly with VCs and what they are looking for on the investment side. I think there are 2 main categories here. One is projects that can bring adoption, Web2 to Web3 adoption, and those are games, some wallets, different mechanisms to onboard blockchain into real-day use. Recent one is a project called Hook, who is doing a launchpad on Binance. They are doing a great job on education side. And there is the Web3 more pro side of Web3, where there's more tools to develop, to trade, to invest, to generate yields. And those would be more on the DeFi side or the decentralized side. And the narrative here is the ones creating the best infrastructure for those traders, for institutional money, and for the real people, the massive people here as well. So those 2 narratives are the things that VCs are focusing the most right now.
Thank you. So I come from a little bit of a different background into this whole field. I came from an art concierge background where I connected buyers and sellers, private buyers and sellers. I was brought in to start NFT Basel with my oldest son, who's here. We basically created the world's first physical to digital art marketplace. We launched 2 years ago here in Miami. And, I think that the NFT revolution was really sort of to bring out the underdog, the artist, and the community, and give people a voice. And the transition that I'm seeing now is very much in line with that. There's a lot of parallels, because what we've done with NFTs, we've kind of opened the gateway. We've opened the gateway for something much larger. We're seeing new business models. We're seeing integration into the metaverse. We're seeing other ways of thinking of how we can improve our lives. And not only that, how can we live in the metaverse a digital life that we can't live in our physical world? So, we're surrounded and bombarded by all these images on Instagram. Everyone has this perfect life, and everyone looks so perfect, and everyone dresses so perfectly. How do we fix that? We can do it in the metaverse, but we can't potentially do it in the physical world. So it gives people another outlet. Mm-hmm. It gives people a voice, because the things that they can't do in the physical world, they might be able to do in the digital world. So I think that it's really a social revolution. There are going to be downsides, but obviously there's a lot of upsides too.
I love that you talked about that, and just bringing it back to the top of the topic of investing in the future of Web3. Jules, you brought up this point about investing in people. Victor, when we were walking down here, you talked about having the position of the VC and understanding what people want to invest in. How do you feel the landscape has changed? And everyone is reading all of the headlines. We all know what happened with FTX, and we know that trust was taken out of this market. So in your respective fields right now, how do you think the landscape has changed? And do you think it will have a direct impact on the businesses that you're working with? Anybody can start.
Yeah, I'll go first, because we help, like I said, projects get listed on our exchanges. And we had more than 5 projects on the listing process of FTX. And the key thing here is, after the FTX crash, most of the exchanges, they changed their requirements to list a project, and that's the first thing. So they are now much more stricter, and they're looking to list real company projects, not only meme coins or even games that doesn't have a structure, it doesn't have a future, a vision, and stuff like that. And the other thing is that happened on the Luna crash as well. So for those who don't know, Binance stopped all the listing process once the Luna crash happened, until August. And that's because they were delisting more than 60 projects from the platform. And now what I see is the FTX crash, it impacted all the other exchanges. So everyone is raising up their prices to only onboard projects with huge amounts of money so they can sustain their price. And I'm talking 10 times more money, 5 times more money to list a project, as well as the requirements are only community, volume. They're looking for real utility, real difference that the project will make in the world. And I can say that by working with projects with the biggest volumes in this current market, the biggest gains in this current markets. And not all exchanges accept them. Not all exchanges are open to just having volume, being a top gainer. They really want real use cases and real sustainability to the project. And I think that's where we are heading into the future, where projects to be listed, it will become more like an IPO process, where you open up to the market, to the huge market, to everyone invest. And to do that, you need to have a really good infrastructure on your company and on your solution, rather than just paying the exchange itself or having a good connection with the exchange itself. So I think that's one way the FTX crash impacted the whole market.
I echo your sentiments, and thank you for sharing your thoughts. I think from my perspective, truly not much has changed. I think this is a conversation that people have been having about blockchain since inception. one of our clients was on the Ethereum board, and I remember he was saying that blockchain was created to be truly trustless and decentralized, but because humans cannot comprehend decentralization, it therefore has an error. And so I think as we're looking at the FTX situation in the micro, you know, it's something that's been happening over the course of the last 100 years, not only in crypto, it's happened in traditional markets. There's always going to be bad actors, but I think this is a conversation that we've been had is, are we going to have something that is truly decentralized, or are we going to have something that I like to call the re-centralization of resources? Because we are humans, we do need to have something that we comprehend. So instead of taking it to the metas of the world, we're now taking it back to our communities and adding resources and value to what truly matters, right? And so again, I think just the hiccups of FTX, and I know so many people had suffered horribly through something like that, really just shows us, again, the microscope of we have to figure out how we're going to live in union and in unison with decentralization.
Estelle?
I think that the thing that we proved with NFTs is that when you have an asset, a solid asset, a physical piece of art, it can be it backs the NFT itself. So if we have an NFT that doesn't have any substantial backing to it, nothing physical, then the NFT it really doesn't have an intrinsic value. And we see the same thing now with luxury brands really entering the space of using NFTs to authenticate their high value asset, garments, fashion, you know, handbags, whatever it can be. There is an intrinsic value attached, so it's much easier for them to use this kind of utility in order to be able to really benefit from what the blockchain offers us, right? So I think it's all about intrinsic value and being able to use, you know, a high value asset to authenticate basically.
I love, Jules, you talking about this idea of re-centralization, which goes to Victor's point of this ecosystem, or furthering our ecosystem of transparency through the blockchain. And Estelle, your points around like NFTs really just scratch the surface. But I want to go back to something you said at the top of your comment, Victor. And you know, because you all work with different businesses, do you think that there are going to be more regulatory practices put in place to govern these companies? And what do you think some new barriers to entry might be for companies that are trying to enter the space of Web3?
I'll take a stab at this one. My team was just having a conversation about this because people were freaking out about regulation. But we've lived with regulation our whole life as humans. Like, we don't know society without rules. And this really pulls back to like the nature versus nurture argument, right? We don't know what it's like to live without any sort of structure. And so we've obviously are now seeing what happens when there is quote unquote no regulation. Of course, we have community and citizen regulation, which is keeping it in check for now, but how much longer can we go before other people suffer, like something with FTX? So that's really my thoughts on that there.
Yeah, I definitely think more regulations coming. I think it's inevitable, and there is probably good regulation and bad regulation for the space. I think the part of the taxes, if I'm not mistaken, in India, the government set up something around like 40% taxes on crypto, which is something that will damage the adoption of crypto to the whole industry there. I don't see that as being beneficial to blockchain at all. But on the other hand, we need regulations on centralized entities at all costs because, well, FTX is a proof of that. They were regulated on the US, but not really. And I see people saying that all the exchanges regulated in the US right now, they actually aren't. Only Coinbase, because they have to do full audits because they are a public company. I think that needs to come for people to have actual confidence on putting their money on a centralized entity. And unlike Jules, when she said that she thinks it needs to be more centralized. I agree that centralization is very good. Holding your assets on a centralized wallet and actually owning it, it's really, really good, and it's the core of blockchain. But I don't think that being in a decentralized manner will actually bring mass adoption. Because mass adoption, if you look at the tech side and the investment side, it always comes from marketing. So the amount of money those companies from the tech side spent on marketing is unimaginable. It's the most of their budget went to marketing to bring people, bring users, right? And once you are decentralized, you don't have that budget. You don't have the capital. You don't have someone pushing for that market. And that's where I see that it will slow down more the adoption than actually bring in more adoption, because you need those companies having marketing budgets, VC backing those budgets to onboard new users into Web3, into the centralized platform, or even into the decentralized world. So yeah, that would be my take on that.
Can I just jump in? It's something very interesting. I've had a call, a business call, a BD call, and one of the gentleman was saying that he was building an ad tech platform from Web3 users, but he was saying it was quite funny because all of the Web3 tools that he was promoting didn't know who their customers were because everyone was anonymous, and they didn't know how to find the data, and they didn't know how to do growth marketing because Facebook wasn't working. And so it was like this rat race of how are they going to sell these tools to people who don't know who they're selling to besides crypto whales, right? So that's, I think, also a big problem of like, how do we identify anonymous information? And hopefully there's going to be tools that empower individuals with that anonymity, perhaps owning your data, perhaps having access to your own data. And I think maybe like StepN, right? When you walk and you get tokens, perhaps you can have data, and then you share your data to win tokens. I don't know, something like that.
Yeah, I think one thing that can really help that, and it's something really hot in the space, is zero knowledge. Because you can probably have the knowledge of the interest of that person without knowing who the person is or anything else about it. So I think there's a lot of improvements coming, and definitely there will be a way to do target ads and stuff like that in Web3 platforms. Right now, since we're talking about the adoption, I think for those projects, the key is actually using Web2 platforms like Facebook, Instagram, TV ads, and whatever. But I think that definitely there's improvement coming on the marketing side for Web3 platforms. If it is with this zero knowledge way or any other way, that it will come. I know for sure that.
Estelle, you have any thoughts there? And I love that. I just want to underscore, because we were having conversations many months ago and disputes in our office where people were like, from a Web3 comms standpoint, we want Web3 comms, we want Web3 comms. It's like, you cannot power Web3 without the tools that are already established in the world of Web 2. So Estelle, would love to hear your thoughts on this.
I mean, I think right now it's really the Wild West. So if regulation equals confidence and cream rises to the top, it's necessary. Otherwise, how do we navigate this unknown world? We have no idea who we're dealing with. We have no idea who's running these companies. We have no idea if they're actually solid or not. So I think regulation is actually a positive thing. Yes, you'll have to pay for it because governments want a piece of everything you're doing, but that's just life, right? So I think there's more upside than downside to regulation, if anything.
Awesome. One sec, I just want to ask the audience, because we have 5 minutes left. How many of you are investors in this space? How many of you are looking for investment in the space? All right, let's break it down. All right, so Jules, and here's the thing. This is a conference. Obviously, you know this. You all should be talking to one another, grabbing information, and collaborating afterwards. But I do want to get into, because we only have 4.5 minutes left on this panel, Jules was upstairs talking about, she wanted people to walk away with ideas and high-level thoughts. So I do want to turn it over to you all to talk to us about trends that you're seeing in the space. And as we get prepared, the last few weeks of the year, how should some of us be thinking about moving into 2023 as we prepare our companies, whether that's from a VC standpoint, whether those are trends that you're seeing from a VC standpoint. You know, Jules, are there people we should be considering on our team or galvanizing on our team? Estelle, are there other trends in this space that you want this audience to know about?
I can start. From a VC standpoint, I would say the two hottest topics is infrastructure and gaming, definitely, because gaming, because it's the main way of bringing adoption to the world, and it's not like only Web3 game for Web3 people. No, it's actual games that are doing something different that can onboard Web2 players. Infrastructure for gaming as well, for cloud services as well, for everything, because the space needs infrastructure right now. It needs a lot of infrastructure. We are really, really early, and those are the two hottest investments that are happening right now. Even though the gaming market's down bad and it has barely volume on the tokens listed there, on the back end, on the VC side, the investments are really, really hot, because everyone is betting on the future of metaverse and gaming, on being the hottest asset and the biggest asset of the crypto space in the next bull run.
I think there's two things that I see. I see something called immersive brand experience, which is really brands entering the metaverse to create a world that is unique to this specific brand in a way that if I walked into a store, I wouldn't be able to experience the brand the same way. So it really gives me a very virtual idea of what the brand represents, and I can be part of it. The other thing I think I'm seeing is really a reimagining of physical and online retail into new format, new business ideas of how to run these retail businesses in the metaverse. More creatively, logistically, much more intelligent. Also, supply chains can be shortened, eliminated, real-time inventory monitoring. There's a lot of things that are changing. So I think really the metaverse will be sort of an extension of what the internet was when it started. And we're going to be able to create a cleaner, greener way of operating businesses.
I love that. Jules?
Yeah, I'll just keep it short. McKinsey and JP Morgan project the metaverse to be a $5 trillion opportunity, and pioneers, whether it's feast or famine, do one thing, and that is they build. And I think the one thing that we're seeing is people really need to create their craft, whatever it's going to look like in the next 10 to 15 years, because this isn't only in a developer's world, right? There's different skills that we don't even know they're going to exist yet that people need to start thinking about or creating or innovating.
Thank you for that. I don't think we had time for questions. We ran out. This was such an amazing panel. Thank you for your thoughts. Thank you for your time investing in the future of Web3. Thank you so much.